Hello and welcome to a new episode of the CTO Show with Mehmet. My name is Mehmet, and in each episode, I discuss different topics from emerging tech, of course, under it, AI, machine learning, and we discuss sometimes cybersecurity. And as you know, I also have on the show sometimes guests who are subject matter experts, and they are also have long experience in the field that they cover. And today, I'm very pleased to have with me Rich Edwards, who's the CEO of Mindspan. So, Rich, I prefer that you introduce yourself because you have a very long experience and it's really fascinating. So can you please introduce yourself and tell us more about yourself and the company?
Sure, sure. Thanks for having me, Mehmet. So, as you said, my name's Rich Edwards. I'm the CEO of Mindspan Systems. We're a data services firm, and we work in the banking industry in the United States. And specifically, we work with community banks. And so these are state and federally chartered banks and credit unions that typically have under $10 billion in assets. So these are kind of smaller local banks, if you want to think of it that. And what we try to do is bring particularly access to their data and the better use of their first party data to these size companies that typically don't have those capabilities in house, nor are well served by some of their bigger vendors. And so that's what we do. That's the value.
That's great. That's great. Just Rich, I know that you've been on the team at IBM Watson,
Hmm.
you developed, you were a part of the strategy for financial sector. Can you a little bit tell us more about that experience, and then later what led you to form your own company?
Yeah, sure. And I will tell you, like, I get asked a lot, like, how did you get into that? And it was, completely blind luck. Like, I am not a mastermind who planned out like this well crafted career path. It just kind of worked out for me. But I was a long time IBM employee. I was in marketing and product management for a long time, particularly software product management. I actually spent a chunk of time in the mainframe business, and you're like, "Mainframe? It's like a 50-year-old technology." And yeah, I ended up, running part of that, like, the data center automation, product portfolio, which turns out the vast majority of customers are, banks and very large financial institutions, state and national level financial institutions, think like Social Security Administration, the Federal Reserve and national banks of different companies, a lot of defense industries that have legacy systems that go back 40 or 50 years. But I ended up having as my customers and who I spent a lot of time with, mostly banks and larger financial institutions. So I spent a lot of time in that industry on a technology side, on a strategy side, particularly when it came to resilience, high availability disaster recovery solutions. That was some of the things that we worked on, which turned out to be very suddenly very, very important after 2008. And there was this ramp up in regulatory requirements for a lot of things that banks were required to do, and we provided technical solutions to that. And then around 20, I think it was 2013, I got pulled in by some people I had worked with before in product management into what was going to be a new business unit at IBM, and it hadn't been named yet, but turned out to be the Watson business unit, and it
Mhm.
was going to be a run at machine learning and artificial intelligence. The core of what they were doing at the time and kind of what you saw in a lot of the television commercials and like investor material was around the healthcare solutions. And it was, very industry focused. It was um, helping doctors ingest and utilize information, particularly from clinical trials that were coming out. So it was a lot of um, ingesting unstructured data, natural language processing, and trying to pull out the most interesting parts, right? It was summarization, it was entity extraction, it was a lot of that that helped them find new information that was coming out that was from the reams and reams of industry and particularly disease specific journals that frankly, a practicing doctor didn't have a lot of time to read. And so
Hmm.
helping them parse that and get them to the most relevant information that would probably, in a lot of cases, particularly on the cancer side, help them treat a patient that was in front of them that they were dealing with in rounds that day. That was the use case. Um, what I got brought in to do was to help build out what eventually became known as the Watson Developer Cloud, which were API services. This was, let's be able to do things with machine learning, particularly heavy on the natural language processing side, um, and make it available to developers to build on. To say to our partners and startups, hey, use our technology and build on top of it to make new things, new solutions. And frankly, that was like a novel approach and a novel way for us to go to market and service our customers at IBM. And that was part of my skill of having known how to get things done within that organization, but it was also an introduction to this whole new industry.
Wow, that's a very inspiring journey, I would say. And I'm sure like it was exciting times going from traditional business model, I would say, to this new realm of really, really exciting. Now, Rich, as an expert, in AI and machine learning for financial institutions, and there's a lot of, talk about adopting these new technologies, especially now AI is everywhere. It's the new thing. How do you see the role of these technologies evolving in the banking and finance sector?
Yeah, no, good point there. Good question. So what I spent a lot of time doing for the first couple of years there was visiting a lot of our traditional customers and saying, look, there's a lot of new capabilities that we can bring to market. How does this help you? Right. And so at the beginning, it was a little awkward because it was, we kind of had a solution looking for a problem. But very quickly found that what we were hearing from our customers was we need to be able to engage tighter and closer with our customers. We
Mhm.
need to be able to offer them a personalized experience and one that doesn't require tens or dozens or hundreds of man hours to create, because we can certainly do that for probably our highest value, highest lifetime value customers. But for the vast majority of our long tail, it's impractical for us to do that, basically with people to be a one-on-one concierge service, for example, right? How can we do that even if it's only in our messaging, even if it's only in how we talk to them as individuals? How can we leverage some of the technology that are here, some of the at least the promise and the capabilities of machine learning to help us do that? And that's where most of the traction came from. That's where it really got interesting. How can we be more relevant and um, more essential to our customers, particularly when it comes to their money? And there was a lot of very interesting approaches that were in there, things that kind of turned into much bigger solutions when you started to talk about, particularly on the wealth management side.
Mhm.
So like AI generated portfolios, recommendations from a um, risk and portfolio management standpoint. You think of some of the companies like Wealthfront, right? Was kind of like based on that premise, right? Is how they
Yeah.
put that together. So that was one whole sector that was really interesting. It tended to be a little bit more analytical from that standpoint, but really took off, and kind of a whole sector of financial technology, fintech, was built on that premise. And it really wasn't until I think really started to see the uptick around 2019, and then in 2020, the gas just got turned on from a fintech investment standpoint, and a whole lot of money got put into that to say, let us, let us effectively disrupt the traditional banking system, right?
Mhm.
And the first ones to kind of do that were really the the peer-to-peer payment systems. And you saw that from Venmo, and you saw it from Cash App, which was part of what was then Square, now Block. And what was really amazing, there's a great chart somewhere, maybe we can stick a link to it somewhere,
Sure.
that showed how long it took them to get to, I believe it was 10 million accounts is what they had. And they showed, the biggest commercial bank in the world, JP Morgan Chase. It showed them how through M&A and careful acquisition and the traditional growth of a traditional bank, it took them about 25, 30 years to do that, from about 1990 to like the late teens. And then it showed that Venmo, which eventually got acquired by PayPal, did it in about 7, and Cash App did it in like 5, right? And they were on this like exponential curve standpoint. Now, obviously that isn't like dollar denominated. They're just counting accounts, but it showed this like rapid adoption of, what was possible in the combination of a lot of different things, mobile being like a pretty big one in there. Um, but it showed like there was a shift in how people think about money and how they think about their relationship to the banking industry. Um, and so this whole issue of who do I trust with my money, there became a palpable generational shift in that. And you saw like a whole lot of investment fly into that because of that. And part of it was, the ability to begin to provide a much more consumer friendly experience to
Mhm.
customers. Everybody kind of talks about the Amazonification of everything, right? But that ability to have a very familiar interface, a very familiar customer experience, one that knows who you are, knows what your preferences are, and is always serving you the most relevant thing, the thing that you need at the point. Um, that began to work into financial services. And that's kind of like the state of where we are right now, maybe at the end of that, because you're seeing now with, at least in the US and I know globally, the rapid rise of interest rates and inflation has really pulled back investment in the financial state, and you're beginning to see several large scale bank failures in the U.S. beginning with
Yep.
Silicon Valley Bank and Signature Bank, and then just this week, um, uh, I'm sorry, I forgot the name of the bank. Maybe we
Fir-
want to
fir-
edit this one.
fir- First Republic, was it? Like,
Yeah, First Republic. Yeah, sorry
yeah,
about that. First Republic, which
yeah,
was bought by J.P. Morgan Chase.
exactly. Yeah.
Um, now there's a concern about the stability of that market and everything, and that that kind of follow on funding in a lot of fintech areas is dried up, but it hasn't really served the demand that there is for, hey, help me with my money, help me in these situations that I'm in, various life events that I'll go through. I need help here. And I'll say one example for this that very very successfully did this on a large scale in the U.S. was SoFi, who was a company that eventually was founded on an opportunity to reprice student loans,
Hmm.
where they found a at least a customer segment that they identified that they felt were um, overpriced in the financing of higher education, with college education. And they were able to come in with a much more efficient and cost saving solution for those customers, and just grew enormously. And then they went on and acquired a bank charter and began to do like more traditional bank things like deposit accounts there. But it kind of started with, I'm going to solve this problem for you, new graduate who's going into a professional career. We're going to put money in your pocket, right, and kind of help you, and that garners a lot of trust with customers. And then they can come along and go, hey, remember how I helped you with your student loans? Well, I can also help you with saving for a house, saving for maybe college for your own children, um, beginning to do investments, like all these kind of like traditional things that you would have normally gone to a bank or a more traditional financial services company to go to. So that's this whole idea of kind of, where we're at with that. And I'll say the premise of what we do is looking at a lot of the smaller financial institutions that exist at the community level, and this is why I say kind of community banks and credit unions,
Mhm.
um, they are in a very precarious situation right now because they're facing this disruption, right? Which are largely targeted towards bigger banks, but they kind of get the fallout from it. And uh, One of the roles that community financial institutions play are particularly with local economies. When you look at the size of institutions, smaller banks and credit unions punch way above their weight class when it comes to small business loans, when it comes to commercial real estate, and when it comes to community development banking. That they are serving a community that they live in, and they tend to do very, very well in those. By very well, I mean they have a much larger stake of their own asset base and their own portfolio in things that drive their local economy, much more than fintech does, much more than larger banks do. And when they become destabilized or threatened or get caught up in a broader trend that really has nothing to do with their operating model, um, those things get injured. And that ends up taking a lot of air out of the room for small business, for local development, for local real estate development, things that kind of don't happen on a national level, but happen in little tiny pockets from town to town to town to town, even in urban areas, but in a localized area. And when they get hurt, when they lose the capacity to do that, it hurts the local economy. And when you look at the US, 2/3 of the new jobs that were created in the past quarter century came out of small business. Most people work for a small business. And when you look at new jobs that are created, particularly coming out of an economic disruption, be it a recession or just a slowdown or whatever we might be going into now, again, much much faster by I believe the SBA has quoted their economist team has said it's like by 18 months. You will see a recovery in jobs and economic activity in small business before you will anywhere else, before in any major brands, before, particularly from publicly traded companies. So if those local financial institutions are hobbled, if they don't have the capacity to finance and provide capital and be relevant to those markets, it hurts the overall economy and slows the recovery. And that's really where our focus is
Mhm.
serving those local financial institutions and making sure that they're able to stay relevant and they're able to continue to serve those markets in a way that's competitive.
That's great, and like you took a holistic approach to discuss this, Rich, which is very enlightening, I would say. Now, talking about that you mentioned some key points, and some of them is like the challenges, and what might be stopping them. So, whether with these community financial institutions, because I can link this to, for example, in the Middle East, for smaller banks or these
Mhm,
like young banks. So and we know, like, the number thing that they have to focus on is data. They should be data driven, right?
mhm.
But from your perspective, what do you think are the challenges that they face in adopting data driven strategies and technologies? And how do you advise usually them? Of course, on a very high level, I know that it's like a need a discussion by itself, but on a
Sure.
high level,
Yeah.
how you can help them in navigating these challenges?
Yeah, no, good question. It is a problem. I mean, whenever I meet with a client or talk to a group of CEOs or particularly CMOs, and I'll say, look, what makes you stand out? Like, why are you differentiated? What's your secret sauce? Pretty much universally, they will say their service level, right?
Mhm.
The personalized service that you're walking into a branch, particularly their like in branch experience, and dealing with somebody who's a neighbor of yours, right? Lives and works in the community, knows what's going on around there, just has this connection that you will not get from a larger institution, right? Um, and that is fantastic, right? And you understand that, and you understand why you look at ratios of like how many people do they have in a community FI, per $1 million of asset, right? Why it's they basically they have much more people working for them, right? It is a people intensive business because that's their business, right? That's their differentiator. But when you talk to them about, well, how does that play outside the bank? How does it play in your digital channels? How does it play through your mobile strategy, through your ATM strategy, through everything that isn't an in-branch experience? It gets a lot weaker, right? It gets watered down. And part of that is um, one, they do not have the technical staff or the technical
Hmm.
skill that their larger rivals do, and certainly not that the fintechs do, right? Um, and two, when they think about information, when they think about data, when they think about IT, it is predominantly a risk-oriented position, right? They think about things like when they think about customer data, the number one thing that comes up is, compliance, right? And so they think about all the
Yeah.
ways that they're held to regulatory oversight, right? In the US, it's, Graham-Leach, Bliley Act, which was part of Dodd-Frank. It is, uh uh, various elements of the Community Reinvestment Act, um, like 12 things from the Federal Trade Commission. So it's a very complicated, like alphabet soup of risk that's involved, and so it becomes this like, let's lock it down. This is customer data is primarily controlled and used by our security teams. We're thinking about this from an audit. We don't want to have any breach of personalized identifiable information, right? It's kind of seen as like almost like this third rail, right? It's a thing that we need to do our business, but let's do as little as possible with it because of the risk that involves. And what's missing there is the idea of your customer data, your first party data, what you know about your customers is maybe one of the most valuable assets that you have. And your ability to use that to serve your customers better, primarily through more personalized experiences, right? And that can be anything from, the experience when you walk into the branch to how you use the app to the mailer that gets sent, right? Your ability to make that experience that much better because of what you know and how you're able to leverage that first party information, that becomes a huge competitive advantage. Because that information that you have, that first party data, nobody else has, right? The fact that you're able to analyze and look at like the debit card transactions for all of your customers and understand who is in the market for certain things or who is in the need or who is approaching a certain life event, and to be able to show up at the time or proactively to say, I'm here to help you with whatever the situation is, right? A marriage, going to college, divorce, death in the family, new child,
Hmm.
purchasing a car, like all of these things, retirement, like all of these elements, showing up ahead of time and being there as the trusted advisor, right? Tremendous opportunity, tremendous advantage, right? An ability to build trust unlike anyone else can or is willing to do. So it's really being able to leverage that first party data. That's the tricky part. Um, Now, why it's hard for institutions this side, really, it's two parts. One is the traditional view of customer data as being more of a liability than an asset, to use a
Hmm.
financial term. And the other one is the technical skill, right? Because you're looking at institutions that may only have a couple of dozen people working there. Certainly, none of them are going to have the title of marketing analyst or even data scientist, right? So they're missing that skill and they're missing that ability to really take advantage of.
Actually, I covered this couple of episodes back about, you know, how to actually generate revenue from the data that you might have,
Mhm,
because there are a lot of companies, big and small, that they are sitting on, I would say, a gold mine of data, but they are not aware that they can actually monetize this data, which is really eye-opening, I would say. Now, while preparing for the episode today, Rich, like, I was reading about some of the things you shared, and I've seen you've spoken extensively about convergence of analytics, marketing, AI, and machine learning,
mhm.
like, which is very, like, it was interesting to me when I read about it. Can you provide with some insights into the future for this conversion and its application mainly on the financial sector also as well?
Sure. Um, I'll say from a technology standpoint, it's really easy to go deep into techniques and approaches and
Sure.
different types of technology. And we can certainly do that. But I'll just start off by saying, um, my approach, particularly when I'm talking to this type of customer, is I usually say, there's some low hanging fruit that doesn't require a lot of technology, that doesn't require, an advanced degree in mathematics or machine learning or CS to really take advantage of. Just being able to sit down and say, "Hey, let me do a one to n listing of all my customers by how much money did we make from them in the past 2 years?"
Hmm.
Right? Just just that. Like, some you can do this in a spreadsheet, right? Just that way. It may be a little tedious to get all that information together and figure it out, but just doing that approach and saying, "Great, look at that top 20%, right? Top 20% number of customers. What percentage of your interest income, non-interest income, and other income did you make from them?" Right? And invariably it's a Pareto situation, right? That you find the top 20% of your customers is generating about or in excess of 80% of your income, right? So so then it becomes, okay, now if you look at, those top 20% of customers, are you spending, that are generating 80% of your revenue, are you spending 80% of your effort, time, and money from an acquisition and retention standpoint on those top 20%? Or are you spreading the peanut butter all the way across all these customers? And usually it's the latter a lot of times, right? And you find that they will spend just as much money to acquire and retain a customer who may not even be profitable as it is one of their top customers that's generating 4, 5, 6 times as much profit for them as anybody else. Now, I'll also say a lot of the institutions, particularly credit unions, they're nonprofits. They're there to serve a community and
Hmm.
aren't primarily interested in profit. But, understanding, what funds the organization and what is going to make you sustainable in the long run, it is very valuable to kind of understand this and know where it is and know how should we be allocating our resources, allocating our time, allocating our effort, and particularly things like our precious marketing dollars. How should those be directed in such a way that we're going to get the biggest return? And just understanding that, like, you don't have an average customer. You have this wide breadth of different types of customers, some that are wildly more profitable than others. And making small adjustments just with that information in mind, that can have a profound impact. A couple of studies I've looked at from some of the vendors we work with on partners, particularly that do customer data platforms,
Hmm.
where you're able to kind of bring all your customer data together. They will show relatively short term return on ad spend can usually be improved by 40% or more. And when you look at the amount of money that even a small institution, as a portion of their budget that they're putting into digital advertising, to say we're going to make that 40% more effective, um, that that can turn a failing year into a banner year, right? Just that effort right there alone. So, like, that's the beginning of it, right? That's where you start. Just understanding, like, your customers are different, and if you treat them differently, if you treat them appropriately, right? And try to influence them in the way that you want them as individuals to act, how you can best serve them. There is tremendous gains to be gotten from. You can be much more efficient as an institution, and you can be much more relevant to your customers because of what you're able to do.
Yeah, like what you mentioned, it remind me of the 80/20 book also as well by Robert Koch, I think. So, when you focus on
Yeah.
the customers who
Mhm.
bring for you it's like it's 20% of the customer brings
Yeah.
80% of the revenue, and this is where you should focus. But as you said, they need to know like in the first hand, who are these 20%. So they need to
Mhm.
pull out this data to understand it.
Yeah.
Um, there's also
I think
something.
I just to
Yeah,
talk
please.
about books and stuff, I'm a big reader, right? So,
I
um,
can see.
yeah, books on this topic. Anything by Peter Fader. He's out
Oh.
of, Wharton. Fantastic. Tends to be very technical, particularly when you get into, like, predicting lifetime value.
Mhm.
Really, really good stuff. All his academic stuff is really good, but that's a little bit harder to read. Um, um, Neil Hoyne, who was, I believe he still works at Google now. I think it's Converted is his big book. Also excellent on this. Like, knock, knock, take me through it. Let me understand, how I can look at customers and be able to differentiate on them and build a view of, what is my lifetime value, not just like that first transactional value, which tends to
Mhm.
be a little bit more relevant to e-commerce, but very much plays into this. Really, really good, like fundamental understandings of like where is there like massive efficiencies that I can get out of what I'm doing, right? Not that I'm going to do anything radically different, but if I can just like tweak what I'm doing and focus a little bit more on where I'm going to get a better return, that can trickle down all the way through what you're doing and deliver dividends for you for years to come.
Yeah. Like, again, like this is very, very important point you mentioned there. So, question I wanted to ask you.
Yeah.
So, I can see, also you have of course, like long experience. I've been myself in consultancy as well, both technical and business perspective. So I got this question, but I thought that I could ask you this one because it can help fellow, people who are interested in coming like someone like us. So how do you tailor, the content to different audiences like CEOs, CMOs, young emerging leaders? Like, how do you make sure that the key takeaways that you want to give is gained when you do a presentation for them?
Mhm. I mean, a big part of this is understanding your audience, and trying to get um, as much signal out of the noise as you can. Right? What's important to them, and some of that is really flat out asking is always the best one. I'll just say one of the best techniques I've heard was a woman who she does like social marketing, social media marketing. But when she has people register for one of her talks or webinars or speech she's giving, she'll just flat out ask them like, what are you most worried about? Like, what do you hope to get out of this, right now?" And she'll ask like everybody who shows up. And even if only like less than half the people respond, she's able to get like really good insights into what are people worried about, right? What's like the biggest problem for them? Either, whether it's a very selfish desire about like, how am I going to make my bonus next year? Or how am I even going to like, keep my job for the next 12 months? Um, being able to kind of tweak what you're doing and talk to that specific need, that's really, really important. And I will say for me, as you kind of mentioned, we primarily talk to CEOs and CMOs of smaller financial institutions. And I will say those are 2 completely different audiences.
Right.
They look different, they have different backgrounds, they have different motivations. You know, we we've built a persona around each that, we've kind of reformed throughout the year. But I will say, what one of the things that we found for this particular market, um, CEO, typically older, typically male, and has come up through the bank, is a banker. Usually at some point in their career, they either came up through the sales side and did a lot of work either in commercial real estate or business brokerage, or they came through the operation side, branch operations that at some point were like the chief risk officer of the bank, right? And they
Hmm.
kind of had this very traditional view, very active in the state and national um, uh, community industry groups, right? That particularly do like lobbying, regulatory lobbying at the state and national level, and have very much that point of view. On the marketing side, totally different. And this changed probably maybe 5 to 6 years ago. You began to see the financial institutions and banks begin to recruit um, more marketers from not only outside the bank but outside the industry, that they were looking at consumer brands to come in. I believe the head of consumer bank, the CMO for consumer banking at JP Morgan Chase, I'm forgetting the woman's name, but I believe she was the CMO of L'Oreal before that, right? And you
Hmm.
think, what does cosmetics have to do with banking? Um, Nothing. It's about speaking to their core constituent, their consumer. How do you speak to someone not as a state institution that's been there over 150 years, but as somebody who is there to be relevant in this person's life today, right? And frankly, that is a skill set that you typically don't get from being the chief risk officer
Right.
of a small bank. So you see a lot of people. I think it's the last time we did a census on this, it was a little bit better than 40% were women, and more than half of them had come from uh, outside of financial services, right? A lot of retail, a lot of fashion, and a lot of personal and beauty brands, um, which is odd, right? It's
Yeah.
not entirely obvious that that's a good solution, but it has worked very, very well for the industry. You also see a lot more minority executives in marketing. One of the big success stories in the U.S. Um, in the past couple of years was there was a Spanish bank called BBVA, and they did a number of acquisitions in the southern U.S. and they started in Texas. I think it was Farmers Bank they started with. I might have that wrong, but they
Okay.
started a number of acquisitions where they were buying banks along the southern border that were kind of they were geared towards looking for upwardly mobile people who were primarily coming from Spanish speaking households. And they had a big remittance business in Mexico and in Latin and South America through the rest of their business. They were looking to get into the US that way. And they ended up building this retail chain through, I think there was a failure they took over in there, but they kind of stretched all the way from California to Florida, right? Along the
Mhm.
like southern side, and they ended up being acquired, I believe in 2020 by PNC. And PNC, they were able to garner probably about a 2x multiple on what their valuation would have normally been, right? In any other place, because they had kind of tapped into this underserved market. They had done it in a very deliberate fashion, and they had this like great geography distribution that didn't overlap with PNC, which is they were kind of lucky that way. I haven't heard anybody take claims that they engineered it that way, but it worked out very well. But they did very well, and it was all about being very, very attuned to the specific markets that they were going after and the specific individuals that they were looking for. And they, of course, made an inordinate amount of effort into their customer service, their customer outreach, and like how they kind of developed that business that way. So it's just an example of everybody thinks banking is kind of an old boring business, and certain parts of it certainly are, but there's a lot of opportunity out there. And you see that in what fintech is going after,
Right.
right? In how much money has been put in to go after this opportunity, and it's all there. And really, back to my point before, the community institution, they're sitting on a huge untapped advantage in their proximity to their markets, and in particular, that data, like all of that institutional knowledge and the customer data that they have, it's sitting there waiting for them to really put it to use, to kind of step up that service level that they've like long been known for and built a tremendous amount of trust with their customers on. And just being able to take that and even incrementally help how they do acquisition, how they do retention, how they make all of their different channels that aren't the in-branch experience that much better for their customers. It's all there for the taking, right? And tremendous opportunity.
Yeah, like again, on the point of fintech, I can tell you at least here, if I meet now 10 founders, I would not be exaggerating if I would say 6 or 7 out of them would be a fintech founder.
Mhm.
So,
Yeah,
yes, and banking is being disrupted very fast.
sure. Yeah,
Last
yeah.
saying before we come to a close, like, Rich, you've been yourself a successful tech leader and now entrepreneur. So what are some lessons you've learned throughout your career that you can share with our audience today?
Ugh, that's a pretty broad question. I mean, I'll say like I said, it, my career path was not something I necessarily planned out. It was just like being open to the next opportunity. I graduated college in 1995. I was an engineer, and I went into the army. I was an army officer for 4 years, and this was before 9/11, so it was a totally different story then. But it was just like I thought that was going to be my career. And at that point, right around 99, I ended up I had gone to college with uh, uh, this woman who eventually became my wife, and we got married in 99, and I realized uh, that wasn't going to work with her and her career aspirations, and how much time I wanted to spend with her. And in retrospect, that turned out to be one of the better decisions I've made in my career. And I didn't really have a plan for what I was going to do next. It was just, what, where can I show up and really use my strengths, what I'm good at, right? And I think one of the kind of counterintuitive things that I've learned and what has served me really well in my own development and working with people who have worked for me, is that idea of really focusing on what you're good at, what your strengths are, right? That, traditionally, when you kind of think about self-development, it's like, well, what do you stink at? Where are your deficiencies? Where you're not doing well? Well, put a lot of effort into going from being really bad to being mediocre, right? The classic examples like public speaking. Like I'm a terrible public speaker. I'm tired. I'm shy, or I don't like to do it, or whatever. Um, the advice of like, oh, well, go take a course and join Toastmasters and do all these things. It's like that's a crappy use of your time, right? Because you're never gonna be great. You're never gonna be a great public speaker if you're starting from a position of really struggling and avoiding it. What's the thing you gravitate towards? What's the thing that you're most interested in? And lean into that. Find opportunities, look for the chance where you can spend most or all of your time using your strengths. Manage around the things that you're not good at. Delegate it, find a way to get around it, but don't spend an enormous amount of energy just trying to plug that hole, right? From the standpoint, like just enough to get by. And for me, it was always the kind of analytics and finding the problem, right? I did a stint in manufacturing where I was working. I was here in North Carolina, and I worked in the fiber optic cable industry.
Mm,
And I remember another guy I worked with. He and I had done an analysis like this we saw this anomalous failure in this fiber that we were buying from a vendor. And we spent several weeks just digging into it, looking at charts and all of this. And it was kind of fun for he and I, right? We were both kind of like data junkies. And I remember there was just this one thing that stood out in it where it was seemingly random and nothing kind of made sense. And we were looking at the lot numbers that were coming from the vendor. And so we had the and we were kind of contentious with them because we were telling them something's different and there was a quality issue and all that. And they were insisting no.
Yeah.
And I remember we went to them and we said, "Hey, ask them if these lot numbers are in order, right? Like, do they issue them in sequential order?" And they said yes. And we reordered the data set by that. And we saw this very clear, like quality change, at this one date. And we went back to them and said, "What happened in April? What happened here?" And then they finally had to fess up and say, "Yeah, yeah, we changed the process and did this." And and then that ended up being probably well into the 8 figures from, like, an accommodation from them and, changed the fortunes of the company for several years, right? And that's one of those things where, like, I made my salary back at that company, with 2 phone calls, but it was that ability of kind of, like, using the information that was available to really kinda dig that out and find it, and that was, like, the thing that I always leaned into. And every job that I've had since then, right, that was always like where I leaned into, where it was interesting. Like, what's the puzzle or the pattern that we can find from the data that we have here in a way that really makes a substantive change to the business. Um, and that's been like a repeating pattern for me. But it's not that that was the thing. It was more having that inclination of understanding that was a strength of mine, right? Like I could sit there and play with that data all day long and not get tired of it, not get bored. Actually, would get energy from it. And understanding that the more time I spent doing that, the more valuable I was going to be to the organization, to the partners, to the people that I work with. So finding opportunities where that was gonna be a big part of it, that has served me well more than anything else that I've done. More than, showing up at the right time from a market standpoint, just like understanding this is how I add value and this is where, frankly, you know, not necessarily my skill, but my ability to like focus and lean into something is way beyond my peers. And if you understand that, that should be your guide for where you.
Yeah, so yeah, like really, it's something also like I feel myself. I do it like it's finding your passion,
Mhm.
finding your purpose, right, Rich? Rich, like anything that you wished I would ask you, you want to tell us about before we come to an end?
I you you know, I don't like to make predictions because I mean, that's a good way to get made a fool of, right? But, um, everybody's kind of like the biggest thing right now, as we kinda talk about this in May of 2023 is obviously OpenAI and
Yeah.
ChatGPT and a lot of the other things around large language models. And, what's gonna happen and how is that gonna play out? And, I'd like to tell you I know, exactly. But I will say, um, it is very clear that this follows, um, the whole idea of what does a disruptive technology look like? What does it do? And when it's able to come in and do something that's not as good as what the existing thing is, right? But good enough for some people, and maybe good enough for some people that aren't currently buying what the existing thing is, that's the classic disruption, right? And so, very, very clearly, that's going to happen. And to how far and to what extent, I think it's probably gonna be a lot more than everybody thinks. Right now, the Writers Guild of America is on strike over this specific issue. So, like, pretty much every television and movie production, if they don't have a script lock, they're shut down right now until like this specific issue gets issued from a contract and a guild standpoint, right?
Mhm.
That's just one example. I think one of the things that you can be sure of is um, technologies like this are going to make mediocre work go away, right? N-
100%.
There is no more business for bland, boring writing, right? No more write this press release for me that just states the facts and gets it done. Like that business is zero at this point. However, kind of like how I've been talking about, the value of that personalized experience from community banks. When there are people that are willing to reach out to you to put in, I'll use the term emotional labor, right? To really understand you and what you need and what you're trying to do and provide you with something that's highly relevant and highly specific to your situation. Boy, that's a leap I don't yet see, these technologies being able to do, at least not now, right? So while the mediocre has gone away, the highly relevant, the highly specific, I think is going to get even more valuable because that's very quickly going to be the thing that's going to help you stand out and differentiate you, right? You can't be boring and bland and for everybody anymore, no matter what you're doing. You have to be very specific and on point and relevant to what people are looking for. No matter if you're a business or an author or, just writing on your social media, right? Um, that is going to become even more valuable as we go forward, as like everything else kind of get commoditized into noise.
Like I always repeat the same. I'm on your side, Rich. So, you
I'm
know,
glad.
yeah, yeah. No, because people sometimes they ask me about like, can you predict the future? And as you said, I don't predict future, but I can see trends and I can see patterns and I can see, you know, because this is the way. By the way, I tell people this is how AI and machine learning works. It takes data and based on that, it generates something.
Mhm.
So for me, I use the same algorithm, let's say, and I try to see a pattern. And when you said about few things that you're sure about it, and the reason you and me we are sure because I always say I never saw a hype so exciting, not only from marketing perspective, from technology perspective. I said the last time I remember I saw something like this is when I don't know when the internet first came out,
You're
or
right. Yeah.
when the smartphone first came out.
Mhm.
Like, and these moments are the first computers came out. Let's say in late 70s, beginning of 80s. But even then, like at that time, there was still room for people to discuss, is this something really that would take off or not? Now we have so much evidence that, guys, it's already have taken these things out of us. It's not like we will be just still arguing, are we going to see AI doing this or that? AI is already doing this.
Right.
And like the thing I always tell people, hey, listen, if your job today is you do something repetitive, better you go and learn something else because AI, not AI, it's automation actually, which is can do your job.
Yeah.
So that's very informative, and I'm on your side on this. And I like also to put my, I every nowadays every episode I think I'm ending on this on the same topic because people are writing me, they're saying, why you think like this? Why do you say we should not be scared of AI? Because I said, guys, AI is something that not will eliminate jobs. It would actually help us to get better jobs. Like instead of sitting behind a laptop and typing something that a machine can do for you, why are you
Right.
wasting your time? Go learn something else. And maybe I'm saying like more human perspective, like you might be able to still earn money while you're doing something fun because the AI is doing that job for you. So this
It
is my
takes the
own
tedium out of it. Yeah.
exactly. So I'm
Mhm.
seeing it. I'm seeing a way that it's actually will allow all of us to be doing better job, having better lives. Because
Yeah.
always yeah, the couple of
And
days back,
I'll say opinions vary on that, right? Like,
yeah,
one of the godfathers of this, Jeffrey Hinton, right?
exactly.
He
That's what I
he
wanted to
just
say.
he just spiked the ball and said, "No, this is terrible," right? And for a long time, it was Nick Bostrom, at Cambridge, right? He wrote the book Superintelligence maybe 10 years ago.
Yeah.
That was like the harbinger of like this is not only is it bad for society, like it's bad for the existence of humanity, right? So I hope
I
they're
was
wrong, I
I
guess,
was
you
angry.
know?
I was angry a couple of days back, and usually I don't like to show my emotions on my podcast, but I did a solo episode when I said, "Sorry, Mister Godfather of AI, I don't
Yeah.
agree with you," because what I said, and I'm repeating it again. Hey, we can think that the fire is bad if it falls in the hand of the bad guys. We can think that knives are bad if it falls in the hand of bad guys. The car is bad because someone might come and run over me, right? So the
Yeah.
AI is no different than any invention that human beings they came up with. And of course, like anything, you can use it either for good or
Mhm.
evil. So let's try to use the technology to not allow the evil to take over. And I don't think that it's human versus tech. It's the traditional thing. It's good versus evil. Like
Mhm.
it has been always been the case. It's not like philosophical. It's just history, science, and facts. And yeah, I don't agree with anyone now. And I get really like little bit stressed. Are they trying to get lights on them? They need some PR. Maybe it's been long time since.
He's kinda made his bones, right? So,
Yeah, yeah.
I
But
give him the I give him the benefit of the doubt that he's being sincere.
But I was
Right.
shocked, like, why someone who worked, I mean, that long and you get this title and you said, "Oh, I'm afraid of what I have done." It's like, I can't remember, the story name, which, the guy who like invents something and then this invention comes and try to kill him or something like
Mhm.
that. Like, mainstream media is trying to dramatize this one in a way which is irritates me sometimes.
Yeah.
And sorry, mainstream media, because like I don't agree with everything you say. So, and I have to, as much as I can, tell people no. Go find the facts. Don't rely only on some people who are trying to save their jobs, which their jobs is just to write the same things again and again, and just they change the titles and they put for us these fancy titles, like
Mhm.
yeah.
Yeah.
So anyway, um,
But, I'll just say one thing on that,
yeah, sure,
counter position, like somebody who is mentioned in the same breath as him, usually you hear Hinton's mentioned, Jan LeCun from Facebook is mentioned, and then Andrew Ng, who he was Stanford and Google and Baidu, and, he was Coursera founder, right?
yeah,
Um, Ng just published I think he has a new business. I think it's deeplearning.ai, but he has like a new course out in prompt engineering, right? And
yeah,
it's like, hey, here is this new technology. Here is a new approach to it. Here's how you can use it in almost like a low no code fashion, right? And trying to make it really easy for people to experiment with it. I
right,
think I'll give you a link. We can put it in the show notes. Like a
yeah,
great
sure,
short course he does to kind of introduce like a little bit more of the subtleties, right? Like practically, how do you deal with, say, prompt injection, right? Somebody trying to put instructions into a prompt to make an
something,
LLM do
yes,
something, right? How do you control, outputs from like a brevity and a formatting standpoint? Very, very, very good. Very, very accessible. Right. So
hmm,
opinions vary. I guess we'll leave it on that.
yeah. We leave it on that. Just but again, before I close, and to this point, I use ChatGPT to unveil for me some. I mean, not the secrets, but I'd say but it took with me a couple of prompts, let's say, until um I got something which now I use. I said, "What is the best way to write prompts for you?" Like, I mean, after a sequence of course, going and
Sure.
coming back,
Yeah.
because I understand, how, these like large language models work. So it came up with something. Yeah, you need to give me a consensus. You need to content, sorry, and then you need to give me like some reasoning, and then you need to give me like few details about what you want, and then I can generate for you. I said, okay, can you write an ebook about this? And yeah, of course. And
Sure. Yeah.
I was able to get like, of course, like it's just for fun, like 30 pages of prompt engineering
Mhm.
thing, which is fun. So this is what I'm trying to say. Like, let's see the fun part of it, not
Yeah.
all the drama. Well, Rich, thank you very much for being with me today. It was really very fun, and I enjoyed the discussion and have a huge experience, which I think the audience will benefit from it. Thank you very much for your time. Appreciate it. I would be putting the links that we talked about, Rich and me, and also I will put some the website to how you can reach to Rich.
Yep.
And also, like as usual, and I say this at the end of each episode, if you have any feedback or comment about this episode or the show, and please don't hesitate to reach out to me directly. You can send me an email, reach out by LinkedIn or Twitter. And if you are interested to be also a guest on the show, please don't hesitate to also reach out to me. I would be more than happy to discuss this. We can come up with something and we can do the recording, same as I am doing today with Rich. And at the end, don't forget to subscribe if you're watching this on YouTube. Subscribe to the channel. If you are listening through your favorite podcasting platform. Also, don't forget to subscribe, tell your friends, families, and colleagues. Thank you very much. And until we meet next time, thank you.
Thank you.